What's going on, guys? Hey, do you like math? I mean, it's so silly to ask you this, but would you go to math with me? Would you please figure out this GME squeeze calculator with me? Because I would love to figure it out with you. My name is Andrew. I'm a data scientist here in Silicon Valley. What does that mean? It doesn't mean much. It just means that I am another smooth-brained ape looking for a banana, and you guys can help along with me by learning about this GME gamma squeeze calculator update with dynamic charts, a proven leading indicator. But first, before we get started, take your mouse, right? Throw it out the window, and then use your trackpad to press that like button, because if you guys haven't yet subscribed, liked, and hit the notification on this video, what are you waiting for? That subscribe counter right there is live, and we're waiting to get to 69, 420, or 70,000 subscribers. Let's get up there and eat this bread together. Heather Jana, thank you for the super. Ruffling chips is a common move before cutting out a big bet. Ooh. Poker pros in the house here. So, too long, didn't read. I'm not shilling anything, just trying to make a point that there's actual companies and people analyzing this stuff. So here is a repost with removed links and added rambling opinion piece. So track record so far. On Monday morning, let's see if this calculator actually works. My question is, how does this new data compare to previous data? Has the number needed to be covered gone up or down compared to previous numbers? Kind of need to know that to make decisions. What's going on? Dupes Master Plus? Maths. Oh man. So GME up 92%, 312 end of week, right? On Friday evening, 312 GME DD. Friday OPEX 312 postmortem warning gamma decrease, right? This calculator is just making moves here. There is that rambling opinion piece right here. It's been 2 weeks with over 70% correlation between gamma and price. Can we now all agree that it's notwithstanding all the other theories such as Robinhood internalizing orders, Citadel writing naked options, DTCC about to audit fake shares, 323 earnings blowout, VR, esports transformation, shorts over 100%. Gamma has been the main factor of the week-to-week price movements these past few weeks. I'm not saying those other theories are untrue, but they don't provide actionable intelligence for gorillas to trade besides HODL, which at 0.7% shorts borrow rate might be a long time. Furthermore, when institutions whales do a short squeeze, they usually follow it up with recalling their loaned up shares, like what Martin Shkreli did with KBIO, though he was able to do this effectively because he had control of over 50% of the float, thus able to coordinate the timing. Holy simoleons, this is just a chock full rich explanation of exactly other stuff that we've happened here. Rather than you go in full detail about weekly option, like how you can be down even though the market is above the strike price theta, delta, gamma. Thank you, Miguel, for the super. Now, bear with me as we learn about some important points. And as you do, as I read this, you can go ahead and make sure you understand this is not financial advice. Gamma delta goes both ways. It can amplify upward momentum, but can also accelerate a downward spiral. Number two, delta hedging is a continuous process. The moment you bought an option, within minutes, bots will start delta hedging your options. They don't suddenly start to buy the hedge only when nearing ITM or on Friday's close. We talked about the actual truth behind gamma squeezes and exactly a step-by-step process in a previous video. So go check that out. It's called the truth behind the gamma squeeze. Buying options at specific strikes and expiries can give you 4 to 10x amount of share buying amplification compared to buying shares directly due to market makers delta hedging by buying the underlying shares. You may not need to buy options to trigger a gamma squeeze, provided the OI already supports it. A small price increment might be enough to tip it over. This is a way to make options work for you. And we've also talked about conversions, how you can essentially get screwed with seeing options get converted into a way to short the stock, even if it's not shorting the stock. So you can do it during when the stock is on the SSR, the short sale restriction list. Yes, the IV is high at plus 300%, highest in the market, in fact, making ATM and near at the money and out of the money very expensive. And that doesn't mean it can't go higher. Ideally, for a gamma squeeze, we should start with a low IV and ladder it up. However, you play with the cards you are dealt. Ms. Alexis Goldstein, and here is her actual Reddit username, testified in Congress that options probably contributed to most of the volatility. What's going on, Brian Hansen? Thank you for the super. Oh yeah, GameStop is currently starting to make a run for it. Currently rejected at 195. Let's see if I can actually resist being rejected here. We're almost done looking at the calculator here, and the calculator is coming up in just a second. Short hedgies are using puts. The short GME put call ratio increase almost 10x on long dated expiries. Hedgies love to short because in trading, as in life, the failures occur much more frequently than successes. Thus, it is way easier for hedgies to instigate a business collapse by publishing negative press, influencing creditors, and launching frivolous lawsuits against a business rather than trying to create success, right? Make no mistake. This is a battle. It doesn't matter at this point if on earnings 323 GME announces a new VR tech with esports or all new 5,500 GameStop stores were to somehow spontaneously combust. All of that matters is that buying versus selling amount and the max pain each side is willing to tolerate. They believe that if the apes understand the mechanics of a play, they will be more willing to commit their hard-earned banana to it. So apes together strong, apes plus brain equal mega banana. All right, there we go. Let's see. Some people are putting their ticker suggestions in the chat. Go ahead. I'm going to look back at that in a second. GME Gamma Squeeze Calculator V8. This is what you're waiting for. This update contains a graph generator to visualize the total delta hedging versus underlying price and or time decay. It includes 3,100 GME options chain OI open interest up to 1/2023. 2023 based on 3/19 closing data, just last day of data. It aims to make a free Excel version of a total delta gamma visualizer frequently used by institutional traders. So this is a free version of something that usually is very costly and used by professionals most of the time. This calculator calculates the net buy sell needed to be performed by market makers given certain price movement and time assumptions. There are 5 sheets with the input parameters coded, color coded in peach orange. Parameters include, right? Every model needs a parameter and hyperparameters as well, but we'll get to that in just a second. Current price, projected price, time to projected price, net market maker percentage to estimate how much percent of the sold call are written by market makers, excluding covered calls, puts, and theta gang spreads, and then strike and expiry filter to exclude option chains based on strike price and date. The new graph simulator graph has the following controls that allows you to visualize the total hedge graph versus price in constant time. So you can have an overall view of the total market maker delta hedging on a different price levels based on current options OI. Clicking on the simulate price button would generate the graph below. So let me see if I can actually see this. Ah, pretty. So total delta hedge versus price. On the y-axis we have shares, and on the x-axis we have the total price. So we have here right now we're hovering around 190. We just passed, tried to pass that 195. Still trending around that, but right here we would have the green, which is the number of calls, and the red, which is the number of puts, and then blue is the net between both of them. From the above, we can glean information about how price affects total delta hedging. The call options generate positive delta hedge, while our buying puts adds negative delta hedge. The total delta hedge coverage with the puts delta hedge as price goes lower and vice versa converge with the calls delta hedge as price goes higher. It can be observed that if the price drops to below $85, market makers will be net short, and further moves downward will be greatly amplified by the puts delta hedging. Thus, the $85 is a level that can theoretically be defended by longs. Let's go here. From the graph, due to the current structure of GME options OI, at its natural theta, time component of the option Greek's decaying state, there will be a net sell of stocks by market makers if price remains the same, leading to a downward pressure on the price. This decay is particular to high IV stocks with a option chain OI concentration. Oh, thank you so much, Charlie Jinkles. I'll cover your super in just a second. There's also going to be a significant drop as it passes the monthly expiry in the April 16th, where a lot of options expire. So we have a couple more options here to find biggest short delta, sort by hedge from smallest, and you can even model what would happen if specific strikes and expiries increases in the open interest, right? And you'll see that from the different columns that 10,000 times 338 100 contract is 3 million USD buys that would trigger 106,000 net share buying by Delta hedging. So this is exactly the point, right? They don't even have to exercise. They don't even have to have the money. When you buy a share, you have to put up all the money. Pony up the money, big boy, because we cannot move the price of the stock unless you pay. For these, we are just insinuating. Essentially, this is the opposite of spoofing, right? We're insinuating that we are wanting to buy the stock at this specific price, and suddenly this allows us to be able to move a lot more volume with a lot less. So obligatory harebrained scheme. I'm just going to read through this real quick. For this gamma play to work, the large short interest still needs to be true. Then, if you can all diamond hand, I suggest gorillas wait until IV drops to a bit to less than 200%, so that the ATM at the money and near out of the money options will be a lot more affordable. When IV drops to below 200%, apes can start building the ATM to near out of the money ladder, optimizing our strikes and expiries using the calculator, right? And that calculator is something that I will link in the description below. Summarizing, the steps are: number 1, diamond hand your shares because it's likely to drop next week. Oh, look, it's happening right now. Wait for IV to be less than 200%. Use the calculator to calculate the best in the money, at the money, and near out of the money strikes. Someone do a Tarzan yell if the upvote over the threshold by amount needed. Everyone, it goes all in. If not, then better wait for another opportunity. No sense in wasting bananas. It takes apes together or that play won't work. Number 5, watch price go up at end of week. This is the week. Defend it by buying shares on Friday 2:45 p.m. Just ignore all the earlier price movements on the day and instead concentrate on the close. This is when market makers try and fix price to avoid max pain. Exercise if you have capital, or if not, roll those calls to higher strikes. Number 8, witness short hedgies cry. Number 9, rinse and repeat for the following week until the entire financial system collapses. Profit. So, all that said, there is a pretty definitive plan right here, 10 steps of what to do this week. We have already started to see that the price has started to go down. This calculator should be able to help you visualize with a free tool that usually costs a lot of money and a lot of expertise, which you have just been explained how to use here. If you want a more dumbed down explanation, then drop some scissors in the chat, drop some scissors in the comments, and tell me exactly which part of this explanation you didn't understand so that I can tackle from that point of view particularly. If you guys like this video, make sure to like it, and I will see you in space. Oh, most importantly, make sure to check out these guys, because so importantly, they have been helping out the Moon Platoon support itself, and without them, we would have no Meatball Army. So once again, thank you guys. You can join as well by placing the join button next to the subscribe button, or going to Patreon and supporting me there. For now, but not for forever, see you in space.